Hello everyone. Um, Here is Christina, and I'm happy to be with you in a new webinar. Welcome to our Scientific Forex Live webinar. Before moving on, please tell me if you can hear me. You can type it onto the chat box on the webinar control panel. It's found at the right corner of your screen.
The broadcast is now starting. All attendees are in listen-only mode.
Hello everyone. Here is Christina, and I'm happy to see you all here. Welcome to our Scientific Forex Live webinar. Before moving on, please tell me if you can hear me. You can type it onto the chat box on the webinar control panel. It's found at the right corner of your screen. Also, if you'd like to ask questions, you can also type it into the chat box. Today we will talk about the rules of the system. I will go through to set some charts for different pairs, and I hope that we can exchange opinions about the pairs and their evolution into the last days. Also, if you have any question that maybe you didn't have the chance to have the answer during the webinar, remember our team is standing by if you need any help. You can go to the support section in the members area and call us, send us email, or use Skype or live chat. We are here for you, so we will be happy to help you. This session is being recorded and will be posted in the members area for you. Okay. Now let's start with euro dollar. Probably all of you have read a lot of articles or statements from politicians in Europe. Probably you know that in this period in Europe, there are a few countries that need to make rollovers for the sovereign debt, and they have to roll over the bonds. So in this situation, they are looking into the market for money to finance those debts, because it is this different situation in the last years. Europeans have a difficult quest to fulfill. It will be not so easy to cover all those debts. We are talking about 400 billions, as I know, for Spain to roll over the debt, and about 700 billion for Italy, and maybe more or less for Portugal and Ireland. So in this situation, probably the banks will bring back the money, will cash the investment that they made in other countries, and they will try to support that operation that have to be made in Europe. What that means for us? It means that for a short period we can see one uptrend if they will find investors for treasuries. If those operations don't have success, if the investor don't think that European countries will support the new debts, probably the euro will go into the down direction. Up to now, I mean last week, they have success to cover most of the debts of Spain, but with one condition: the investor don't want to invest directly in the bonds. They want to go through International Monetary Fund, and International Monetary Fund to give credits to European countries. The countries that participate with the biggest amount in this operation was Japan, with about 60 billion, the biggest value. Was about 15 billion participation of Switzerland, England, and I think Singapore, and the other participation was quite small. Sorry, not Singapore, it was Russia. And the rest of the participation was less than 5 billion. So we can see that the investors are not so happy and don't trust too much in the success of Europe currency. Okay, now let's go to see what is the technical settings on the charts. On euro dollar, probably you are familiar with this setting. On daily chart, we have a downtrend, and we have several waves. We have now the fourth wave. We are on the last waves of the impulse. We are on the waves that are weakest. So I think that for the next period we have to go into trades on medium term, not into long term trades. On daily, we can see very well that one wave means about, here we have about 32 days, 31 days. It means 1 month. the first number from the cross is the number of candles. The second one is the number of points. I have one 5-digit one broker that is offering 5-digit for currency for pairs. So for pips it means 1,400, about like this. For the second wave we have about 21 candles and about 1,089 pips. And also, if we want to see how big was the retrace of the pair on the second wave, we just can use Fibonacci to measure it. So I put Fibonacci, I drag it from the top of the wave in the sense of the chart up to the low, and we can see that the pair stops at 78.6 level and retreats and start the wave number 3. The wave number 3 was about 65 days. Usually the wave number 3 is the biggest one of the impulse. We had about 1,600 pips in this way, and if we want to measure it, we will use Fibonacci from the low to the high in the sense of the second wave, that one, and we can see that the pair reached the 141.5 Fibonacci level, a little bit down, and after that made that retracement and start the wave number 4. I didn't mention that for each of those waves we had also signals on from RSI and MACD, from cross of RSI and cross of MACD. So here it was one signal for sell. Sorry. Here it was one signal for buy. Here, between of them, we had one signal for buy too. But this signal was not a strong one because we don't have also confirmation from MACD. In this, when we receive that signal, you can see very well. When we receive that signal from cross of RSI, in this period, the MACD, the red line, was inside of the histogram. So this is why I said that the signal was not so strong. But into daily chart, for this signal, up to this retrace that the pair made, we had about 400 pips. Why I want to mention this? 400 pips means a lot for any trader. So we use daily chart just to have the idea what is happening with the pair. If we want to go to trade daily chart, it means that we have to stay, like I said, we have one wave that means about 30 days. The second one also is about 21, 22 days, 24. We have to wait 1, 2 days for the confirmation of the signal, this one. So to trade daily chart, to trade signals on daily chart, it means to have patience. We have to wait for days. We have to wait for days to have the confirmation. We have to wait days, maybe 1 month or 3 weeks, like we had in the second wave, to have to close the trade that we put into the market. Okay, so we saw what's happened with the third wave. The third wave, again, from the signal up to that low the pair made here, we have 65 days. Here, I will make it a little bigger. We had the signal for buy. You can see that the signal was given by the cross of RSI. Here, we already have one clue from oscillator of moving average. The bars of histogram start to be smaller and smaller. Here it was one other signal. The pair make one swing between 127, 141. That swing lasts for 12 days, and the amplitude also about 200 pips. So I'm mentioning all those things because I want you to know exactly what to expect from a trade on a big time frame. Okay, after that period, we have wave number 3. We put again the Fibonacci here. And we can see that the pair reach 50 level on that retrace, but have no power to go to the superior trend line of the channel and start to make a swing between 50 and 23. So we have that waves. We can translate this like indecision in the market, and we can see this that is happening every day. A lot of person give us a lot of information about indecision of politicians, about indecision of the market, about difficulties to support the structure of European community. And yet, the markets are waiting for a strong decision from Europeans. So we have about 50 days of indecision in the market. From technical point of view, so we see that the pair stop at 50 level Fibonacci and make a swing at 23. Here we have a strong support for the pair. Also, the trend line, superior trend line, is one strong support of the pair, and we have to wait to see what will be in the next period. Probably as long as you can see here is one triangle. And probably the pair will make swings between those lines, between that one that is the between the support and between the resistance, that one that is the resistance of the pair for the moment. We can go also to see the waves between into this triangle. We have the first swing about 60 days, the second one 16, 13, 15 days. The next one lasts just a week or so, and now as long as we are at the edge of the triangle, we have small swings. We have that area about 200. And I think that we have to wait if we are just new in trading, or we have to go for medium trades. Okay, if you have any question, please, because I want to go on to smaller time frames. There are any questions regarding the big picture related to euro dollar? When you say wave 3 is usually the biggest, does that mean longest term or greatest range of pips movement? We have a longer period for the third wave, and also bigger number of pips too. We can see that the first wave is about 1,400. The third wave was 1,600. So usual, the third wave is the biggest in numbers of days, or in numbers of candles, and also in number of pips. Eric asked me, what is a medium trade? A medium term, we consider the trends that are on 4 hour and 1 hour medium term trends. It means trends that last for a few days maximum, and we can make analysis on 4 hour chart, and we look for signals for entry and exits on 15 minutes, 30 minutes chart, 1 hour chart, something like this is medium term trend. Small term trend, we make the analysis 1 hour and we are looking for entries and exits on 5 minutes chart and 15 minutes chart. For long term, we are looking for charts like this. Okay, could that triangle be viewed as continuation pattern? From the cycle Elliott wave theory for cycle of the pairs, we can see that triangle as a continuation pattern. It's depending a lot of how the political will make the influence for the European economy. Probably most of you knows that European economy is based on 2 countries, on France and on Germany. In France, we just have election. And probably you know that on first place was Mr. Hollande. And Mr. Hollande is the leader of Socialist Party, so he will not look too much for helping the companies. Actually, in France, most of the companies are owned by the state, and I think that we will not see too much austerity in France. Also, they have a law. They forbidden to media to pronounce words like crisis, austerity, and they said that they are not in any crisis. They don't want to reduce the social protection, and the austerity is not for them. So, but by the other hand, the economy, the debt of France is about 1.3 trillion euro, and the trade balance is about 500 billion. And so it will be difficult for them to maintain the growth into the economy. And if you don't have economy, you can't have social protection. Actually, somebody, if there are persons that want to consume, it needs somebody to produce. So the production is coming from the economy. So in this case, actually this is the reason why market think that will be difficult for Europe to be sustained just by the German economy. If the France economy will go into the will grow slower, I think that probably the euro will make that retracement for the waves ABC, and probably will look to the down direction. But This we can see probably in several months. Here we can have one retracement, probably the wave ABC if they will make the decision to not help the economy, probably we will see something like this. Um, in this triangle, we will have the continuation. We have the base of the triangle. So something like this. And when we will see the break of that trend line, probably the pair will try to reach 61.8, and after that to go into the down direction, we will see, I think, something like this. So this will be wave A, a next wave that will test the trend line, and a new one into the up direction, probably at 50, or can those two waves, wave A wave A will be equal with wave C or something like that. Wave B here we will put and the last wave, wave C. So actually we have that move from Elliott wave, wave 1. Here we have wave 2. Wave 3. Wave 4. And something in this direction, wave wave 5. And the ABC move that we have there. Um, Paul asked me if I trade those waves on daily. No, I'm not trading on daily. I'm trading. In the last period, I trade 1 hour and 5 minutes chart because I don't have enough time. Um, I talked about wave 3, I think that in November, something like this. Colin, how trade the current situation? I will, so I want you to know how I see this situation now on daily. I will delete all those waves and what I put on the chart, and we will go to smaller time frames to see exactly the situation. Somebody asked me if I will go also on GPP. I will go. Just I want to, I think that it's better to finish with euro dollar, also with small time frames. And we will go also on GPP and for the other pairs if we have enough time. Okay, so now we can consider that we are into one channel between 133 and 130. For the short period. So this will be the place where the pair will swing. I will go now into a smaller time frame. I will go on 4-hour chart. Maybe for the moment it's okay if I have just one chart on the screen because you will see better the details. I will delete also that Fibo that I have on daily, and for daily I just consider that it's close to be one sell signal here. RSI went from 70 level to 50 level. I just don't have the level of 50. So here we can see that on daily the oscillator of moving average start to make smaller bars on histogram. Also here RSI 5 came from 70 level to 50 and is close to make one cross, so we can have one signal for sell. I will check also on MACD to see what is happening. The MACD just have the signal for a buy. Here, when the histogram of MACD is under the zero level and the bars start to be smaller and smaller and the red line is going out from the histogram, this is signal for buy. So we have here one signal for sell, here one signal for buy. It's it means that that move into the down direction will be not so strong. So our scenario regarding the evolution of the pair into this triangle is confirmed by the signals that we have from RSI oscillator and moving average. The last wave that we have on daily chart is the wave number 4. So those levels for Fibonacci will be very important. The pair now is swinging around area 3841 and probably will swing into that channel with smaller and smaller swing until it will make one decision to break the support or the resistance area. We can anticipate we can have probably 45, 46 days for these swings. Will be a very long period. So this is the reason why I think that it's better to consider just medium trends in this moment. I will go into the 4 hour. Also, here we can see that the last important wave was from this level 13 to 50, close to 61.8. We can put also Fibonacci here. I will make it one other color. And we can follow the moves of the pair related to this wave. We will make the same settings for the second chart. Because I want to follow the same levels. Yeah, I think that it was one of them. Okay, so I have the idea what is happening with the pair. I can see that line from the trend channel on daily. I can see that channel where I suppose that in the next period the pair will make the swings, and I will follow what is happening with the pair. I will look for signals. I will look for trends on 4-hour chart, but I will look for signals for entry and exits on smaller time frames. We can look for signal into 1 hour or for smaller signals. for smaller time frames for signals. To know exactly what I'm looking for, I will measure all those swings on 4 hours, and I will see how much time takes for a movement or so. So here we have one move between 70 level of Fibonacci, 170 level. That move was about 33 candles. 33 by 4 means about just a second, about 5 days. Here, if we are looking, was not a clear situation. We don't have strong signals. We don't have strong oscillator. We have one buy signal, but here it was one buy signal, but was not confirmed by MACD, so it was for a short period. But for this period means about 5 candles, 20 hours. It means about 1 day, and also 127 pips. So that swing between 70 and 100 means a lot for traders that are opening are looking for trade to trade just during the day for daily traders. Here we have signal for sell. Probably we have to zoom to see exactly. And also we have signals from MACD. We have several try of the pair to go into the down direction. Here was one, here was the second. So here was the first one, here was the second. Also the MACD, the red line went out from the histogram, a new signal, a new confirmation for sell. So we are looking to the pair to probably when test again that 100 level to go into one sell. And here when the pair retested the 100 level and go into the down direction, we go into the second sell. And here we have also the confirmation from MACD. When the red line is going under the 0 level and the histogram start to form bars under the 0 level, it means that for a period we will be into a downtrend. It was one strong move, and we have to number the candles from the signal or from the signal of MACD on the next candle, and we can see that the move was about 230, 250 pips. Probably in this area we have to go out from this trade. When we see that the RSI 5 start to go into the opposite direction, we can prepare to go out from the trade or just go out from the trade. Here we have also the bars that start. We have the bars that start to be smaller and smaller. We have one consolidation here, but it's possible. I think that it's okay if we are going out from the trade in this area. Otherwise, when we see the cross of RSI and when we see that the cross of RSI is giving us the opposite signal, we can go out. We have to go out from the trade. So in this area will be the next exit. The stop loss will be, we have to set it a few pips over the 100 and the Bollinger Band, maybe in this area when we have the signal, but here we can put the stop loss lower, probably at the last high of the pair, because we also have the signals from SAR that is indicating that the pair start to change the trend. So that signal, we can consider that it is a good signal and will the pair will test the support and will go for bigger low. For if we are looking to Fibonacci, we have here 188.76. Our target have to be from this point, first one, that support area, but we are looking, when we have also confirmation from MACD, we are looking for 61 level and for 41.438 level. So our target will be in this area where we can see that the pair made the consolidation. To be more sure for this signal, we have the signal on 4 hour and we will go for 1 hour to have more accuracy for the signal. So we have the signal here. I'm looking for exactly the same point for signal. As you can see, the oscillator of moving average went from the upside to the downside, and is the bar started to be smaller, but after that, when we have also the confirmation from MACD, the bars start to be bigger and bigger in under the zero. And we have one period that here where we have a lot of incertitude related to that to the signal. So to have more accuracy of this of those signals, we will go into the 1 hour chart, and I will look to see what was the situation into that area. So into 1 hour, first signal that we have is here. We can consider that it was a strong signal. So here, if we put one trade, we can see that it was one consolidation, one retracement, and after that the pair moved into the down direction. Why we have that situation? So this is the area we are talking about. If we are going on daily, this one is the area. Everyone thought that the pair will try to reach that superior trend line channel, but it stopped earlier. And actually, this was why we have this period that was so long and where we have a lot of incertitude. Everyone thought that the fourth wave will touch somehow that trend line. But I want to show you something. I will just delete a little bit that Fibonacci on the last wave. So here the pair went again to 13 level, and the swing was between 13 and 23. So if we are looking on the fourth wave, the pair stopped at one very important Fibonacci level. For daily chart, this one is a very important level. The Fibonacci levels are very strong. So we can consider as resistance the line that is a little bit over that 13 level. I will look also onto 4-hour chart because here can be okay, so the maximum stop loss will be a few pips into the upside of 13 level, and this means about 20-25. We have here just 15. Probably is too close to the maybe can be a little bit higher. So in this case, we can see that we are covered by Bollinger Band. We are covered for the last high of the pair in the period. We are over the 13. We will be into one safe trade if the pair will be under that line. I will put again the Fibonacci on the last wave, and we will go to see what is the problem in this area. So the first signal will be here into this area, where we have the confirmation from MACD. And probably we will stay just to this point if we are trading on daily basis. For 1 hour we have the signal earlier. You can see that is outside of that area where I marked. The next signal on 1 hour chart that is very clear and is for sell, because we are looking for sells, is that one. And also it is confirmed by the signal from MACD. Okay, I have some questions. How to identify the start of the first wave? Actually, the first wave is very difficult to identify, and most of traders don't identify the first wave. And also, it's very difficult to anticipate how big it will be. The easier wave to anticipate is the third wave, but also is easy to anticipate the wave number 2 that usual is about 61, 70 measured with Fibonacci. I have one other question from Peter. Christina, the channel I had drawn my channel from different peaks, so there was plenty of exit signals. Yes, on smaller time frames, for example, for one signal on 4-hour chart, we have about 4 or 5 signals on 1-hour chart. And if we are going for 30-minute chart, probably we have 4 times more signals, maybe 16 or 20 signals for 30 minutes. I think that so when we are going on smaller time frames, we have more signals than in the previous time frame. So we have to look to to draw smaller channels like this one we have here. We can consider here one channel, yes. I will make it with aqua. And for this period, we will look for swings on this channel. And we have a lot of swings and a lot of entries on smaller time frame. This is something normal. We have to follow this channel on 4-hour chart, but also I will make this. Of course, that we have more signal on so you can see that for one signal for one signal for buy, one signal for sell, one for buy. In that period, we have a lot of signals on 1-hour chart. If you want to go on medium time frame, you have to take signals from 4-hour chart. So it means that you stay 3 days up to 3 weeks into one trade. And you will follow the trends on daily, as long you take the signals on 4-hour chart. If you are making the analysis on 4-hour chart, you will look for signal into 1-hour chart. So in this case, you will stay for a smaller period. I will go to do the same thing, to measure the candles and to measure the amplitude of the moves into that area where we have that ranging market. So we have here again, so here we have one signal for sell, one signal for buy, one other signal for sell, and I will go to a smaller time frame. Yes, if it is 4-hour, I have those 3 signals. I have that one. That signal that is for buy here. And here in this area, I have a signal for sell confirmed by MACD. I will make into one different color the signals into 1 hour to see how many trades we can do into that period. So the red one is the signal that we have into 4-hour chart. This one I will make it navy, and into 1 hour we can see that the signal was in this point. I have to move it with 1 or 2 bars more. Also, the signals is confirmed from by MACD. So here we can look for one sell. As you can see, the pair going to the upside. So if I'm going into one cell in this area, I have to go out when the RSI 5 is start to go and to be close to RSI 14. So probably this first signal will be not a good one. This is why I advise you that to look for signals after you have the signal on bigger time frame. So the signals that are coming after the signal that we have into 4-hour chart will be better signals. Here we have a new signal from 1 hour. We have the cross of RSI, and also we have the confirmation from MACD. It's the first signal that we have after we have the signal on 4-hour chart. So from this point here, we can look for one trade. The first one will be about 46 pips, because here we have immediately the pullback of RSI 5. RSI 5 is going to cross RSI 14, so I think that we will go out. The next signal for sell will be in this area. We are looking just as long on 4-hour chart we have signal for sell. We will look for signals for sell onto the 1-hour chart. So here is the next signal for sell. I have also the confirmation from MACD. On this trade, I have, let's see, about 60 pips. When the RSI is close to give the signal for buy, I will go out from the trade and I will look for a new sell signal. I have here signals for sell. Those are very confusing. So for the traders that are just into the beginning of for traders that don't have too much experience, it's better to stay out from the ranking market. Actually, this is why everyone said that it's better to stay out from the ranking market. I'm reading the questions. Okay, so most of the questions are related of exactly the entries and exits. And is one question related to the wave number 5. waves number 4 and waves number 5 are the weakest from the impulse formation. From 1, 2, 3, 5 waves of, so the impulse can have several waves. The numbers of the waves that are forming the impulse move is one Fibonacci number. It can be, as you remember, we have Fibonacci number, Fibonacci series is 1, 1, 2, 3, 5, 8, 13, and so on. So we have to add the first two numbers to have the Fibonacci series. In the most of the situation, the impulse wave have 5 waves. But probably if we will check on Aussie dollar, on this downtrend that we have in the last period, we can see probably about 8 waves that will be most of them equal or something like this. But anyway, there are 8 waves. Each wave will have one retracement at one Fibonacci level that we have here in this scale. So, for the euro dollar on daily, is normal to be respected what is usual. So we are expecting to have 5 waves, and the wave 4 and wave number 5 to be weakest and to be something like equal waves. And we can see that we have a difficult situation for trades in general. We have small swings in number of pips and in number of days, and this is because we have incertitude in the market from fundamental point of view and also from technical point of view. Related to the entries and exits, we are looking for the principal trend on bigger time frame, and we go to smaller time frame to look for entries and exits. Here we know that the pair is possible to make one peak because it's one important Fibonacci level is 13 level on daily. So is the 13 level on the last wave on daily is one important Fibonacci level. So here we can expect one swing of the pair. The swing that we are expecting into the daily means ranking market into the smaller time frame. So I will try to find the resistance and the support area for the pair, for those swings that the pair is making, and my resistance and my support in this specific situation is 13 Fibonacci level on daily and 23 Fibonacci level on daily. And I will try to take the swings on a smaller time frame. If it is okay with me, the swings on 1 hour, I will go for entries and exits into 1 hour. If the periods for 1 hour are not okay with me, I will go onto the smaller time frames and look for signals. What means that is okay with me? The swings into 1 hour. I will look first to the variation, and it means about 100. The maximum I have 130 pips that so we can consider something between 80 90 pips, something like this. Probably the best trades that I can take into this period will be something about 90 or 80 pips. What means in time this? So I will look between the signals, what means about 24 hours. If it is okay for me to stay 1 hour or to check from 1 hour to another, I will do like this. Otherwise, I will go into a smaller time frame to find if I feel better with the variation, with the swing of the pair, or I feel better with the time that I have to spend for a swing, to take a swing, to take one trade. So this is why I'm going from one time frame to another to find the best period that is acceptable for my time. It is acceptable for my account, and it is acceptable for life. I don't have to stay glued to the computer all the time. Maybe I want to spend 2-3 hours per day for trading. Maybe I want to spend 50 minutes for trading or so. So if I have to spend just 50 minutes for trading, I will go on bigger time frames. I will go to daily and for analysis, for technical analysis, and I will go for entries and exits on 4-hour chart. I will check from time to time. It's enough 50 minutes per day to see what is happening with my trade. I will be aware regarding the waves that I have to take. So I will consider stop loss maybe 50 pips or 100, something like this, and I will look for trades that are 300 or 400 pips. And I will stay into one trade as I have the average on daily. But probably it will take about 30 days for one trade, 22 days, as you can see that it was measured. If we go to stay a few hours every day, we have to go on smaller time frames. Probably 4-hour and the 1-hour chart will be too much. It means this combination of time frames maybe is for person that want to stay few days, 1-3 days up to 1-2 weeks, let's say maximum 3. But for person that want to stay several hours per day, let's say 2-3 hours, maybe 6 hours per day, it's better to go into 1 hour and to make a choice between 15 or 5 minutes time frame. So for the person that are going to stay with smaller time frames, this period of ranking where I can make something about 90 pips can be a very good period. So all the period means 129 hours. That means about 5 days. So 5 days we had that ranking market. So in this situation, I will go here and have 1 hour. I'll make it smaller. And I will look for all those entries and exits that are given to me by the signals into 1 hour. And here I will have 5 minutes chart or 15 minutes chart. Let's go for 15 minutes chart. So here I have the signal into 1 hour. On 15 minutes, that red one. On 15 minutes, I have signal here, and also I have confirmation. So for this one, I will go into one trade, and I will go out when the RSI is coming back and have the cross with RSI 14. Let's say in this way. So in this area, it means about I have about 10, 13 candles of 15 minutes. It means about 4 hours. And I have about 39 pips to look for the trade. I will go. Here I'm receiving the signal for a buy into 1 hour. Just a second to find exactly the same point. So here I have the signal into 1 hour for a buy. I have the cross of RSI and the smaller bars from oscillator of moving average. On 15 minutes, it means here I have a little bit earlier the signal for buy. I have the confirmation. I will go into one trade here a little bit earlier, where I wait the signal into 1 hour, and I will go into one trade. I will put the stop loss under the last candles, and my target will be the next Fibonacci level that I have here. So about 20 pips. Here, the pair touched the superior Bollinger Band, and I received the signal that I will have one opposite movement. So here I have to go out from the trade. Something like this is going when you have trades on 1 hour and 15 minutes. And the trade will be at about 60, 80 pips, is not more than that. Eric, how reliable are signals on 1 hour chart? The bigger time frame you are making the analysis, the bigger accuracy you have. But if you are looking, if you don't have a big amount to put in your account, you will look for smaller time frames because you want to take more swings of the pair. So in this situation, you will have less accuracy because in the retails, most of the clients have accounts, something, I don't know, anyway, most of them under $10,000 or so. There are just a few that have bigger accounts. So in this situation, they will go on smaller time frames like 1 hour and 15 minutes or 5 minutes, and will try to take as more swings as they can do. And as long we have so many systems to go into trades, we have so many robots, we have a lot of things like this, it will help you, not the accuracy of the analysis, of the technical analysis, but it will help you a lot, a very good money management system. You have the Fibonacci into 1 hour. The Fibonacci lines are respected quite well, but also you can have Fibonacci lines for 4 hours. And Fibonacci and the good money management and combined with signals from one other indicator, like I have crossover SI. This is okay, but also you can find one, I don't know, maybe some cross of MACD, maybe some stochastic, maybe for entry and exit signal, it's possible to use one other system that can be adjusted for smaller time frames, for 1 hour, for 30 minutes or so, because probably you read that report. We have different settings for indicators that are working better in one specific time frame. So maybe you can find one combination of indicators from that report if you are looking for smaller time frames. Sure, it would be nice if you can be specific and show at what price you enter, stop, and target for profit. So, on the ranking market, like we have here, when we have one signal, so I saw that the pair was rejected from the support, from that area, 23.6 support level on daily. I have the signal here. I have the signal for buy. And also, probably at the next candle, I have the confirmation from MACD, something that I was waiting. In this case, on 1 hour chart, my stop loss will be under the last low. I'm sorry, I will delete it. So the stop loss will be here. And the level for that last low that the pair made is 1.3277. The entry is at the signal, at the next candle that I saw that is going up. And my target will be 13 Fibonacci level, or 0 level, Fibonacci level that was on the last wave on 4 hour. So my target will be 92. The problem is that here the pair start to here the pair start a little retrace. Sorry, the problem is that the RSI 5 start to go to cross RSI 14, and also the pair start a little retrace. I can consider that in this point is just the test of Bollinger Band, because all the time when the pair is arriving to the middle Bollinger Band, have a little retrace about 10-50 pips on 1 hour chart, and as you can see here it was about 16 pips, and after that continue. As long as I receive the signal from MACD, the confirmation, I can wait to see what is happening to the next FIBO level on my smaller time frame on 4 hours. So if the pair is going from 23 to 13, or I will close the trade. If I'm not closing the trade, I will pay attention to the next problems that I can have with the trade. I also see here the signal that the RSI is start to go into the down direction, and also the MACD couldn't cross the 0. So here I can stop the trade. Also the pair touched the superior Bollinger Band, so I have just that move between those two Fibonacci level, 23 and 13, the Fibonacci that I put on 4 hour chart. So something like this have to be the trading when we don't have too much accuracy. And when we are going for signals on 15 minutes, on 5 minutes, it's quite difficult to change the stop loss and and it's necessary to make one mental calculation for risk-reward ratio. You need to use the cross and just to make the calculation very quickly. So here I have 8 pips and I'm looking for 16 pips on this signal that I have on 15 minutes. When the RSI is coming back, I have to go out. It means that I don't have time to write journals. I don't have time to explain what I trade, what was the situation, what was the news, if appears something like this, and so on. You have to be very quickly. You can not pay attention too much to all aspects of trade, but you have to put to take care of money management, to put the stop loss, and to look at the signals. It's quite different for smaller time frames, and all the times the pairs is changing the direction. I'm sorry for the person that posed question regarding 1 hour trades or so on or smaller time frames in the members area, but if we have different time zones, maybe it will take me 12 hours or more to see that trade. And after 12 hours, it's possible to have to go out from that trade. Johnny asked me which time frame will give a best winning percentage profit based on my trading so far. I never calculate something like this. I'm looking for my private account. I'm looking to have one small variation between the wins. I need to have some standard deviation that have to be constant. It's not so important how much profit I'm making. It's more important for me to have standard deviation, to have in the different periods the same amount as profits. Actually, if you are looking for, you have more swings, he is asking me is 1 hour or 4 hour. 4 hour give you more accuracy. So the entries, exits, and the Fibonacci give you best idea about the swings of the pair. But if you are considering the swings and you are looking for entries and exits, it's normal that on 1 hour chart you have more swings than into 4 hour chart. Into 4 hour chart you are looking for one move like this one, and you are looking just to take as much as possible from that move. Sorry. Into one hour, or maybe it's better to, no, I will let it like this. Into 1 hour you have more swings. So you will try to take this one where you have signals for entries and exits, and of course that those swings can bring you more profits. Because if you just as one idea, you have on 4 hour about 300 pips, but here we have on to 1 hour we have 85 plus about 200, 300, 350, 400, 500 pips you can have from swings that you can catch into 1 hour. And if you are looking just for a straight line, just for one trade, you have about 300 pips. So if you are going on smaller time frames, you can have more signals for trades. You can make more pips on smaller time frames. Christian asked me, how can you filter out the bad signals? So if I have signals from cross of RSI and cross of oscillator, and I don't have the confirmation from MACD, I can consider that is this signal is not is a weak signal. If I have signals like that red bar here from cross of RSI, I have the bars of oscillator. Let me make it a little bit. So here I have the cross of RSI, the bars from oscillator of moving average are smaller and smaller, and quite soon after a few bars I have signal from MACD. So this can be considered a strong signal. I have this signal on 4-hour chart, so it is possible to have one long period until the signal is confirmed. Here we have that ranging between those two levels, and it was one it was something different that it was usual, because that signal was actually, we have to consider a strong one, but was not. This is why we have to pay also attention about the political situation and about the things that are happening in the countries that have the currency we have in the pair. But also on daily, we can see that on this area we don't have yet the confirmation of the signal. On daily, just a little bit late, we have the signal for sell. So you can make one difference between, here is the signal on daily. As long as we have the signal on daily, we can look for signals on smaller time frames. So I have here the cross. Is okay if I'm waiting for the next candle, and in that area from this candle to the next one to look for a signal into 4-hour chart. So if I have on 4-hour chart the signal from cross of RSI, oscillator and MACD will be a strong one. In time I think that it will be easier to filter the signals. Eddie Bijaja asked me if I trade with bigger leverage like 400, 1 to 500, 400, 1 to 500. What's your recommendation for time frame? You can make a choice for time frame according to your program, according to your life. If you have a day job, if you depending how much time you can spend into the market, the leverage is related to the position that you have to go into the market. You have to see to the margin to have maximum. I think that with this leverage you need to have about 20, maximum 30% leverage, and you have to calculate the value of the pip, and just to make the changes on the money management system. So the leverage is related to the margin, to the size of the trade, and to the equity that you have in your account. It's not related with the time frame. The time frame is related with your program. Okay, just I saw that we spend a lot of time with those settings for trades. I will continue in the next webinar with the same, because I said that I also have some different pairs, some different trades that I want to present to you, and I also want to be more clear the rules of the system. Peter, you don't have to consider. He said to me that I have a lot of knowledge about the market. No, you don't have to consider something like this. Actually, for markets, when you are trading 4-hour time frames and smaller, the biggest time frame is 4 hour, you have to take care about the technical analysis and to take care about money management. So those things related to fundamentals, related to politics, related to, you can find from different articles. You don't, to be a good trader, you need just to form one routine. It's more important than everything. You have to make a choice for one time frame that you are working with, and you have to try the rules of the system, the signals for entries and then exits, and the levels of Fibonacci until you form one routine. It's very well if you are using the same size for position. You are not jumping from one size to another, because you will form the routine with money management. And after that, to just adjust your trade until you form the routine for the system. It's about routine, it's not about the knowledge. So it will be okay. SG. So do we wait for signal from MACD and enter, or enter before MACD? So you have the signal from crossover SI, and you make the money management for the trade that you want to enter. You establish one stop loss that can be according with Fibonacci level, with Bollinger Band, with the last high, or with the last low. If you are into, depending if you are into one buy trade or if you are into one sell trade. After that, you are establishing the target. The target will be the next Fibonacci level on the bigger time frame, and you can establish one or two targets. You can go into one trade at 13 Fibonacci level or 23, And your first target will be 38.41 area or 61.70 area. So you have the cross of RSI, you are going into one trade, you establish the stop loss, and you will wait. If you are receiving the signal from MACD, it's okay. It means that you can look not just for the first target, you also can look for the second target. MACD is the confirmation for a stronger signal. It's not indicating necessarily the signal. In my system, I'm not using MACD as a signal for entry or exit. Rod Beans is asking me how much risk per trade you would recommend. What is win to loss ratio is depending of traders. I think that you can have quite a big ratio for this with this system. As risk per trade, you have to follow the money management webinar. I think that for the person that are working with bigger lots, will be better if they are looking for smaller risk, like 2 or 3% of the equity for risk, because when you are looking with bigger amounts, you have more emotions, more. There are, you know very well probably that the trade is 50% about psychology and 50% about science, or I don't know, about technical analysis, fundamental analysis, and so on. So a lot of traders are facing fears related to their trades, and in this case, it's better to have at risk as smaller amounts as it's possible. So 2% will be okay. And also, you can decrease the size a lot. It will help you. If you are working with smaller amounts, so let's say that you have one account of 1,000, $5,000, and let's say that you have a job, you can cover that amount without any problem. You can go for bigger risk, and this means about 10% and margin maximum 30%. So is the money management is different from a person to one other. It's depending what means the equity that you have in the account for you. And as long you will feel comfortable when you are trading, you will have better results. Johnny asked me, when do we start to enter the trade, before or after major news? So the trades, if you are working on smaller time frames, 1 hour, 15 minutes, and 5 minutes, it's better to avoid the news, because on the news you can have one swing of about 100, 150 pips. And as possible, it's better to stay away from those trades if you don't have one specific system to trade the news. Usual the pair is trying to reach the same level into 1 hour and 30 minutes. If this is not happening, you have to accept the change that the news brought in the market. Okay, so thank you for the uh, thank you for that you was here with me in the webinar. I'm sorry, but we have to close this session. I'm waiting you in the next webinar.